morning, traders. So today we're going to be looking at NEO, and we're going to do a pretty comprehensive but brief breakdown. We're going to look at what the options market is saying, what the dark pool data suggests. We're also going to take a glimpse into the fundamentals and see if we can find any clues there as to what the future holds for NEO. But starting out, before we get into all that, I just want to highlight one thing. And I think this 922, this is according to the two-stage cash flow model. Its fair value is at 922. Now, it doesn't have to get there, and it doesn't necessarily have to stay there. It can surpass that. But as of right now, that gives us something to work with, right? An idea based on fundamentals. Now, we will touch on fundamentals more later, but I think for right now, let's start with the chart. Now, what I did to start off was just highlight the January effect, I guess you can say, for NEO. And it's had three greens, slightly greens, right? This have a nice one, but it contracted. A neutral one right here that we saw what happened after that. And then the two red ones are what could be pretty equal. And, it's not uncommon to see similar patterns like this in other markets. So this one had almost a 43% drop, and a drop to 5.5, where I have it, is almost a 41% drop, right? A little bit over. But to explain why this level is relevant to me, this $5 area, 5.5, is because if we go back to its inception, it was support for a while before finally breaking under, getting rejected at that same 5.5 level, which to me tells me that it became resistance. And we'll see a similar dynamic when we go into the dark pool data. But once we broke out, we see what happened. Now, I think that is now we're coming down to retest that area. So why I have this as a relevant price target, now we see that a similar move as last or a couple years back would be something similar to that, which lines up with that price point. Now, I do have some gaps under here at 484, 422, 337, or 327, 291. So I was curious about those gaps, if there was anything to tell me or suggest that it's possible to get back down there. So we've seen the 200-day right here on the daily. It was that's where price rejected at. And I got curious, and I wanted to draw up to see how long or what was the range per se for this move right here, all the way down here. And then I kind of cloned it and seeing what that would add up to. And to my surprise, it lines up fairly well with that 422 gap, right? So I'm not saying that that's what's going to happen, but that for me is enough to tell me that if it did come down to $5 and I'm willing to take that risk on, that I have to understand that the risk, the real risk, the very real risk is to fall down to 422, right? Or that 420 area. So I think that's a good starting point right there, just to kind of highlight that. But again, I do believe this is support, as it was resistance, then became support. Unfortunately, there's some gaps there, so there can be some overshoot. And now I want to go transition into the options market because I want to see what that's telling us. Or so on the right-hand side right here, we see the options themselves. And then on the left-hand side, we see the chart, right? So on the chart is where we start to see that dark pool data. And right here, we see the beginnings of it at that $7 area, which makes sense because we have defined support right here. And then that bounce before finally breaking down. And that's where that similar dynamic comes into the inception, where we were above a certain $5 price point for a while, broke down under it, rejected when we got back above it before finally breaking out. So I think we're in a similar dynamic now, potentially. But one thing that cannot be denied is that we are under resistance. So price is under pressure, and any run up, unless it breaks above, mid seven range or higher, the likelihood to get pushed back is high. Now, like I said, that 5.5 area is relevant to me because of that, and we can overshoot some. But I think in the bigger picture, what could be forming, and it's still early stages, but what traders like to refer to as an inverted head and shoulders, having the left shoulder here, the potential head in the making. Now, we never really know how far the head can go. It can stop here, but I think realistically, I think it can drop to at least a 5.5. And if it dropped lower, it wouldn't be the end of the world per se, as long as we can get back above 5.5. But if it is indeed going to be a head and shoulders, an inverted head and shoulders that's forming, then this level right here um, seems like the major point of contention. Now we do have the short term point of control here, like in the seven, the high sevens. But there's a lot right here. 19.3 million is a lot of resistance up there, which lines up not only with the fair value estimates, but it also lines up with a gap up there and a potential pushback area for, or the 200-day, right, on the daily, and the pushback area for which could become the right shoulder, right? Now, it would depend on that right shoulder would need to hold above $7. And I mean, it could overshoot some, play around there for a little while. But I would expect something similar to what happened right here on any run up higher into that $9 area. Now, I'm not saying that's what's going to happen, but as of right now, I think that's logical. And we'll see why, because when we get into the fundamentals portion, that gives us a little bit more light into the matter. But yeah, so going down from here up to there, holding there for a little while, consolidating, I think opens up that doorway to come into this area. And this area just so happens to line up with the trend lines, with the bigger time frame trend lines. So it all lines up to me, no matter how you cut it, which layer you look at. I like to see that there is some confluence on various different forms of analysis, right? So now let's break down the actual order flow and see what the at least the short term is looking like. Okay, so now if we pull up this breakdown, I guess you can say, of the market of all these orders, and just to before we get into that, just a quick rundown. These are the order types right here, and sweeps, blocks. Now the ones that are not mentioned are like splits and multi legs and things like that, but we get the idea. The price, the volume, calls or puts, buy side ask, bid side or ask, strike, so on. Expiration right here. Now, before we get into all that, I want to point out the main thing that stood out to me. My price target hit yesterday, and it just so happened to be, or my price alert just hit yesterday, and it just so happened to be that that's the day that this little bad boy came in. So 126 contract to like a week, next week, end of next week, 6.5 call, which we're at now. So theoretically, they're at their strike price now. But that's the contract that really got my attention. And I'm going to filter that out some because I really don't want to see everything else. I want to see anything around there for next week and what it's looking like. Now, there's a lot of calls, it seems, right? There is some puts, but it's anyone's guess if they're still in. That was from early on. Chances are they're probably out already because they got in higher up at 8. I doubt they're still holding. Maybe they hold till 5. It's anyone's guess, right? 5.5. We don't know. But the two main things that really caught my attention was one, that first one that I highlighted, this line 123, I think it is. Yes, because and the reason they got a yellow hit because it was 1172 the prior open interest, and then double that came in actually. Right, so that's significant interest in that contract, in that strike. So that tells me that I'm definitely interested in that if I get something that's favorable to me. Now, another thing I want to point out is this next line, 131. It was a put at the bid, which is bullish as well, because that makes money on the price increase, right? Now, it wouldn't be a lot of premium because they got it at 7 cents. But it still makes 6, 7 cents per 4,700 orders. Still pretty good, right? And each of those orders is 100 orders within that contract. I mean, but anyway, yeah. So I saw those two, and I'm like, well, that's pretty interesting. I wouldn't mind getting into that, but again, not at the current price because it's quite elevated for me. So I wanted to see, well, what would it look like? What would it look like if it actually decided to get on something like that, right? And the way this looks now, they got in at 23 cents. Now this is not calculated for that, but if it came down to 560, 55, 550, five and a half, something like that, I think it's looking like $3 per contract or 3 cents because you're getting 100 of them. And if it were to run up to that, let's say 418, you're probably looking at a potential gain of 65 cents per contract or $65 per contract. Now, depending on how many contracts you get, I mean, if you get 300, I mean, if you get 100 of them, cost $300, pays out 6,500. Now, I'm not saying that's going to happen, but being that to me, the 5.5 range is a high probability bounce point, I really wouldn't mind taking the risk. Now, there is always that potential for it to expire worthless, especially if it falls under that 5.5 and goes to that 481. So anytime, I mean, anything, there's always risk to it. So let's go back to the chart and before we move on, let me pull up this because I want to add some context to what's possible. Now, the very first thing that's here is the overview, right? So in the overview, what I seen was, yes, it's 31% undervalued. The revenue is forecast to grow at 22.58 per year, which is massive, very attractive. But this one right here, currently unprofitable and not forecast to become profitable over the next 3 years. Now, that's a big downer as far as enthusiasm goes. Now, I don't think that it's impossible to run up or anything like that, but I don't think we really see a huge breakout potential just yet. I think it's going to be some time. A lot of frustrating times for people, most likely. And if we just kind of scroll through this, and we'll get to everything, but again, starting with the PS, the price to sales ratio, within its peer group, it's not in bad shape. It's doing good within its peer group. The industry average as a whole is at 4.2, so it's still in decent shape as far as price to sales go. But we need to see some movement there, and that's not really going to happen until March 21st when we get the earnings, I believe. So there's still a lot of time. This is concerning a little bit. Current PS versus fair PS. Now I've seen this go through the roof. It doesn't necessarily have to be negative, but there's that potential for a pullback, right? The analysts forecast they've been wrong the whole time. So let's see how that goes for them. But the future growth rate again, revenue growth is great. The projections are great. Future return on equity not so great. So we'll see how that plays out. But what I really wanted to look at is the balance sheet. Let me get to the balance sheet real quick. I could have just skipped it. I would say one of the huge positives is the total assets versus liabilities. It's in the positive. So I think it's on a firm footing. It has cash runway for a year at least. And from analyst projections, it does look like we've bottomed out as far as the free cash flow. So could that translate to price? Sure. Could we be at the early stages of a potential turn? Possibly. I think that 5.5 is really going to be the one to really dictate that if we can stay above that. Yeah, cash runway for more than a year. So that's another good sign right there. So I think to wrap it up, I think we have a pretty good idea of how things are looking as far as the options, the dark pool data, We see it right here, this $10 area. I think this is going to play out. So we've seen that what it could translate into, like a head and shoulders, would come up here into this $9 area, which is the fair value zone, kind of build off of that. We've seen that it once it does get above that, even if it gets pushed back down here, this is obviously or would obviously be a support area. So I'm really looking forward to seeing if we can come down some, bounce up, consolidate here until earnings or leading into earnings. And then I think the main risk is going to be this trend line right here. We do have a gap up there. So on any run up here, we could spend some time. We spend a lot of time here, a couple months. So it could be end up playing out that we spend a couple months here, maybe all of February and most of March before we run up. And then again, we're going to contend with that psychological trend line level, untouched resistance, anything above that. So there's still a lot to cross, but could it happen? Sure. And just keep in mind, if it were to play out again where we get like a equal move down, we could come down here. So I think me personally, I'm willing to take on a risk. This is not trading advice or anything of the sort. Trading involves significant risk and you can lose it all. We've all heard that spiel, but it's serious. And but for example, if I decided to take this trade right here, I would do so with the understanding that it can drop to 422. And under that 422 opens the risk for a lot lower into that three and a quarter, just under $3. In fact, the biggest risk that I found from a technical perspective, and I did not put it up here, is that it can drop under $1. Now, I think for that to happen, a lot would need to happen. Maybe the U.S. parting ways with China, that can create a situation like that. War with China, that can create a situation like that. I don't know, a complete shutdown of the shipping lanes in the Red Sea, maybe. Um, could see price drop. I don't know if that far down, but it could introduce a lot of risk. COVID, another COVID, right? We've seen that there's that new strain that's supposedly kind of rearing its head up again. And I don't know how that can go, but we already have an example in prior history that it could create chaos in the market. So, yes, is it possible? Sure. Do I see it right now? Not necessarily, but I am aware of it. But anyway, coming back to this, I think short term, this is very important. If we were to come down here, and I think in the manner in which we move around, so we're at 657, gapping up quite significantly. So if we were to hit this right now, then I'm not sure if I'm willing to take on that trade immediately, right? Because the fact that it really didn't come down to build support, seeing that there's so much resistance up here, I feel like there's the potential to actually come down some again. And eventually we will see this area. That's my thinking right now. It may not happen, but usually we want to see it build a little bit more support here before attempting to break through all of this, because chances are it's just not going to be able to happen, especially with things like Tesla going on where they cut rates they cut their prices on cars. That could have a negative effect on NEO's profit potential. So I don't know. It's anyone's guess as to what happens next, right? But as far as for me, I do understand that this is an important price point, 5.5. It can come down here some. In fact, it can come down all the way to 420, and then getting back above 5.5 would be the first main obstacle. Eventually crossing here, $7, and holding above that is another huge obstacle. But once we get above that, chances are we can hold that, create a right shoulder type of deal for inverted head and shoulders potentially, and eventually run up to that trend line at that 14, 15 area. Now, after that, it's anyone's guess what happens. But I do plan on doing a follow-up on this this weekend, or maybe next weekend. I'm not too sure. Depending on the reaction I get for this video, if I get 100 likes, some comments or whatever, anything equaling 100, some subscribers, then I'll see that there's high demand for it. and I'll come back to it on the weekend and do a follow up to see how things developed over the next few days. All right. So if you guys liked the video, smash that like button. Let me know what you guys think. Are you guys bullish or bearish? Do you think 5.5 is possible? Do you think we see 9 first? What's your take on it? I'm always curious to see. But yeah, happy trading and best of luck.